Everyone, the latest news in Bitcoin today is that BlackRock's Bitcoin ETF, which the ticker symbol is IBIT, I is in iShares, which is their brand name for their Bitcoin ETFs, and BIT as in the first three letters of the word Bitcoin. So BlackRock runs the largest Bitcoin ETF exchange traded fund, and that is it's again BlackRock's Bitcoin ETF. IBIT is the ticker symbol, which is the trading symbol. So, futures are greenlit to start trading tomorrow. So, what does that mean? Well, for the average person like you, it does not mean you should buy or sell puts or calls. You should not mess with any of that for the average person. But it's actually a really big deal because sophisticated financial investors are it's very important to do that for them. I'll give you some examples here. And I've never actually brought anyone into a video before, but I see one person is on the line, and I'm going to see if I can invite them. And person who's watching, if you want to join this video and do it with me, feel free. We'll do it together. If not, just decline, but I'm going to try. Um, anyway, I just sent you an invite. Feel me here. So anyway, so futures allow you to buy or sell the option to buy or sell at some future point an asset. So why this is important is because when Wall Street firms are buying a lot of Bitcoin, like the BlackRock Bitcoin ETF, when they're buying large volumes of a Bitcoin ETF, they want to be able to hedge their position. If you hear people talk about hedging your bets, hedging is done with futures. For example, BlackRock, and this is something I think they will do at some point, BlackRock may decide to add the Bitcoin ETF to their official strategy portfolio, which would be a huge deal. It would mean the BlackRock ETF would have to buy tens of billions of dollars of Bitcoin even to satisfy a 1% allocation to their main sort of standard portfolio that they offer their clients if 1% of that standard portfolio was Bitcoin. And that is something I think they will do at some point. The two things I think that they were waiting for, this is pure speculation on my part, just to be clear, but the two things I think they were waiting for is one, a favorable regulatory environment, which they got in spades on November 5th with the red wave of Republicans winning everything. That is very favorable for digital assets. And so they basically don't have to worry about the regulatory environment for Bitcoin for years and years to come. And second, I presume they would not want to do that unless they could use futures to hedge on some of that exposure. So, for example, perhaps they could put Bitcoin into their main portfolio, but that they could buy put options at some price at, let's say, 80% of the current price. So if something went wrong and the price went the wrong direction, they would have the ability to force someone to buy shares of their ETF at 80% of its current price. That's the sort of thing people do when they hedge their bets. They want to make a trade, they want to buy something or sell something, but they want to preserve the ability to capitalize on the upside between now and some future date on whatever it is. So each time there's a big new development in the world of Bitcoin, whether it's futures trading on the Bitcoin ETF, BlackRock's Bitcoin ETF, which looks like it'll go live tomorrow, it opens up the potential universe of people who can buy Bitcoin that much larger. So right now, there are absolutely positively people on Wall Street saying, I really want to buy Bitcoin, but I've got to have a way to hedge that bet. And if they're buying it on Wall Street, they're probably buying BlackRock's Bitcoin ETF, IBIT. That's what they're probably buying. But if they cannot hedge that risk at all, then it's just a lot easier for the compliance and regulatory people to say, I'm passing. Like too much risk. Too much risk. Not. We're just going to wait. We're going to wait until futures of trading is available for that asset. That way, we can at least guarantee a certain amount of upside or guarantee a certain risk mitigation on the downside. It just lets them cater the asset and the trade and the purchase to exactly the level of risk that they have tolerance for. So, in summary, that's sort of a long way of saying options are a way that allows you to hedge risk, hedge your bets, And without those, there are a lot of people that are unwilling to buy an asset because it doesn't let them hedge their bets. And as of tomorrow, on the largest Bitcoin ETF, you will be able to hedge your bets, which is a huge deal, which means it will open up the purchase of Bitcoin to a lot of people that are not willing to buy it today, mainly major institutional investors. Now, does this apply to you? Should you be buying puts and calls? No, I would never recommend anybody use futures trading and trading options on anything that is way more sophisticated than the average person should be messing with. And the vast majority of people who attempt to do that sort of thing just straight up lose their money. That doesn't change the fact that it's a really big deal that it will be available for that. It'll be available for the BlackRock Bitcoin ETF and for the people for which those sort of instruments are a part of what they do on a daily basis. It is a very important part of what they do on a daily basis, and often is the reason they can or cannot buy an asset. So, as of tomorrow, a lot more people in the world will be willing to buy Bitcoin as compared to today. That's probably what the news of that is probably what bumped the price from just under or just above 90,000 to above $91,000, where it is right now. Earlier today on the news, it was above $92,000. That's not much of a change in price, but I think long term it's huge because it opens the door for some major players to enter the marketplace that are currently sitting on the sidelines. So hope that helps, and always here for any questions you have. Very exciting times are ahead. It's going to be a wild ride and so much fun. Thanks, everyone.